Hello and welcome. Today, we're cracking open the official rulebook for one of the most important topics out there, carbon accounting. We're going to break down the international standard that's all about bringing order and, most importantly, trust to the world of climate claims. It's called ISO 14064. You see it everywhere, right? It feels like every day another company is announcing some huge climate pledge. We're going net zero by 2040, or we'll be carbon neutral by 2030. But how on earth are we supposed to know if those claims are legit? How do we tell the difference between real action and, greenwashing, where it all just sounds good on paper? To get past that problem, to build real trust, you just can't have thousands of different companies all making up their own rules for how to count carbon. That would be chaos. What we need is a common language, a single, reliable rulebook that everyone uses. And luckily, that rulebook actually exists. Now, here is the absolute best way to think about this. If you've ever worked in business, you know about GAAP, the generally accepted accounting principles. It's the set of rules that make sure all financial reports are consistent and trustworthy. Well, ISO 14064 is designed to do the exact same thing, just for greenhouse gas emissions instead of dollars and cents. So here's our game plan. We'll start with why this is such a problem. Then we'll walk through the three main parts of the standard. First, how you count a company's footprint. Second, how you track projects that actually reduce it. And third, the independent audit that checks all the math. And then we'll tie it all together. So let's kick things off with the core problem itself, why we desperately need a common language for carbon. Just imagine for a second if every company used a different currency for its financial reports, and they didn't tell you the exchange rate. It'd be impossible, right? You could never compare Apple's profits to Google's. Well, it's the exact same problem with carbon. Without a standard, one company might only count emissions from its own factories, while another includes all of its employee travel. The numbers just aren't comparable, and those big, bold claims can end up being pretty much meaningless. And that brings us to the first part of the solution, ISO 14064-1. This is the part of the rulebook that lays out exactly how to create a complete inventory of an organization's greenhouse gas, or GHG, emissions. So what is a GHG inventory? Don't let the technical name fool you. It's really just like a financial report. But instead of tracking dollars, it's tracking tons of carbon. It's a complete and total list of all the greenhouse gases a company puts out into the atmosphere. And, just as important, any that it might take out. So the very first step for any company is to define its boundaries, what's in and what's out. The standard gives them two ways to do this. There's the control approach, which is pretty simple. If you control a factory, you count 100% of its emissions. Then there's the equity share approach. If you only own, say, 40% of that factory, you only have to count 40% of its emissions. Now, the key here isn't which one they pick. It's that they have to pick one, declare it publicly, and then stick with it for consistency. Okay, next, all those emissions get sorted into different categories. Categories 1 and 2 are the ones you'd expect, the pollution you make yourself, and the pollution from the electricity you buy. But this right here is where it gets really crucial. The standard also makes companies look at indirect emissions, things like business travel, shipping, and even what happens when a customer actually uses your product. This forces a much bigger, more honest picture, and it prevents a company from just, outsourcing its pollution to make its own report look better. All right, so once you have a clear picture of your entire carbon footprint, how do you actually measure your efforts to shrink it? Well, that's what part 2 is all about, the rules for properly measuring emission reduction projects. This is where we shift from accounting to action. Let's say a company wants to install a massive field of solar panels, or maybe upgrade its factories with more efficient machines. Part 2 gives them a super strict framework to figure out exactly how many tons of greenhouse gases that specific project helped them reduce or avoid. Now, probably the single most important idea in this section is the baseline. Think about it. You can't measure how much you've reduced something if you don't know what you're reducing from. The baseline isn't just what you emitted last year. It's a carefully calculated, evidence-based prediction of what would have most likely happened if you had done nothing at all. So the math is actually pretty simple in concept. A project's real impact is just the difference between the emissions that would have happened, that's the baseline, and the emissions that actually happened with the project. This strictness is what prevents a company from taking credit for a drop in emissions. That was really just because, say, one of their factories had to shut down for a few months. And this all creates a very clear life cycle for any project. You don't just go out and do something and then try to count it up afterwards. No. First, you have to plan and set that credible baseline. Then you do the project. You monitor the real-world data, And only then can you report the final reduction number. It's a system that's designed from the ground up to produce a number you can actually stand behind. Okay, so we've got a standard for counting the whole footprint, and we've got one for measuring the projects that cut it down. But how do we know if anyone is actually following these rules correctly? Well, that brings us to the final and maybe most critical piece of the whole system, the independent audit, which is all covered in ISO 14063. To put it simply, verification is the audit. It's the fact check. It's when a totally independent and qualified third party comes in, goes through all the data, double-checks the calculations, and then determines whether the company's final carbon report is accurate and, crucially, that it follows all the rules of the standard. This is the ultimate backstop against greenwashing. And this is not just some quick glance at a spreadsheet. I mean, look at this. This is the official flowchart for verification, and you can see it's a really rigorous, multi-step process. The auditor has to do their homework, conduct a strategic review and a risk assessment, and then they execute their plan, gathering evidence along the way. It's only after a final independent review that they can issue their conclusion. It's designed to be methodical and completely impartial. Now, one really key detail here is that not all audits are created equal. The verifier can issue two different levels of assurance. Reasonable assurance is the gold standard. It's a positive statement, basically saying, yep, in our professional opinion, these numbers are correct. Limited assurance is a bit less intense. It's a negative statement, which sounds more like, well, we didn't find any evidence that the numbers are wrong. It's a subtle difference in wording, but it says a lot about how much confidence you can really have in the final report. So let's zoom out and put all of these pieces together. Why does this super technical standard actually matter to all of us? The thing is, these three parts aren't just separate documents. They're designed to be a single interlocking system. If you look at this diagram, you can see how Part 1, the company's inventory, and Part 2, the project report, are the two core claims being made. And then Part 3, the verification, wraps around both of them to provide that final critical layer of trust. Each part needs the others to work. So if you only remember one thing from all of this, let it be this simple three-step system for trust. Part 1, count it. Get that complete and honest inventory. Part 2, cut it. Measure the projects that are actually reducing those emissions. And Part 3, check it. Have an independent expert come in and verify that the numbers are real. This count it, cut it, check it framework is what turns a vague promise into verifiable progress. But in the end, just having a rulebook is only the first step. ISO 14064 gives us the tools we need for accountability, for transparency. It gives us a way to finally separate the real leaders from the laggards. The challenge now, for everyone, is to make sure this powerful rulebook isn't just sitting on a shelf, but is actually being used to demand, to track, and to deliver real, meaningful change. Thanks for watching.